Well, good morning. We welcome everybody to the Farm Journal State of the Dairy Industry webinar. It is now 10 o'clock Central Time, so we'll go ahead and get this conversation started. I'm excited. We have three exceptional dairy industry leaders who will share their perspective on this report, but just as importantly, they're going to talk about the opportunities as well as the headwinds that our industry faces more in depth. My name is Karen Bohnert. I'm the Dairy Editorial Director for Farm Journal, overseeing our two dairy publications, Dairy Herd Management and Milk Business Quarterly. As most of you know, the challenges and opportunities that dairy farmers face are very real. The roller coaster of prices we've seen in the last couple of years, in my opinion, underscore just how volatile our industry is. I do want to quickly share that we will carve out a few minutes towards the end for a Q&A session. So if you have questions, we will address them at the end. You can ask the questions via the Q&A or chat button. But I'm going to go ahead and turn the table to our three excellent dairy panelists that we have on today's webinar. I'm super excited about that. We have Michael Dykes, who's the president and CEO of International Dairy Foods Association. Stephen Kane, who's a senior director of economic research and analysis with National Milk Producers Federation, and Erica Medke, vice president of insights with EverAg. Thank you to all of you for carving out time and joining us today. I would like you each to just take a couple of minutes, if you will, and tell our viewers more about yourself and your background. Let's go ahead and start with Michael.
Thank you, Karen. Thanks for having me, and thanks for all of you on the webinar participating today. I'm a kid who grew up on a dairy farm milking cows in southeastern Kentucky, dairy cows and burley tobacco. Graduated in animal science and agricultural economics from the University of Kentucky. Auburn University for Doctor of Veterinary Medicine. Was in veterinary practice in Southern Illinois for 6 years, primarily dairy practice. But we were a mixed animal. We saw all things: dairy, cows, hogs, small animals, etc. 26 years with Monsanto Company. Was hired on the launch of RBST for dairy cows. And the last several years of my career, I was with GMO crops, corn, soy, cotton, etc. Responsible for the global government affairs operation with Monsanto when I departed. I've been the CEO of the International Dairy Foods Association since October of 2016. So my entire life has been in and out of the dairy industry. And I'd like to make the comment that I have seen dairy from all sides, from the all the way from the cow to the finished products. It's a wonderful industry, a lot of excitement, a lot of opportunity. And I am just thrilled to be here and be here with you today and have a discussion with others, National Milk Producers Federation, and with Erica with EverAg. So thank you, Karen, for having me.
Well, thank you, Michael. We're pleased to have you. Erica, why don't you share with our viewers a little bit about yourself and your background, please?
Thank you, Karen. It is my pleasure to be here today. Another farm kid from Wisconsin. My maiden name is Pagel, so I am a cousin to the Pagels up in Kewanee. My family, we ship to what is now the Saputo plant in Lena. I married a farm boy, so the Medkeys in the Fond du Lac area, Bill and Joanne, are not letting the dust settle on them in retirement. They are doing well also. Master's degree in agricultural economics with a focus on dairy policy with the folks up at Cornell. I had a stint in Washington, D.C., so I appreciate the work that Michael and Stephen do inside the Beltway. I chose to get out of the swamp and spend the next decade or so in procurement roles at Kraft Heinz, at Land O'Lakes, Winona Foods, and Foremost Farms. Along the way, I also spent some time working in a cheese plant. So I'm a licensed cheesemaker, pasteurizer, operator, and today have been with EverAg for the last roughly 8 years, manage a team of analysts, writers, media people, watching the dairy markets, trying to educate people, trying to inform them, and help people make smart business decisions. So again, very happy to be here today to speak with you, Karen, and with your audience.
Thank you, Erica. We'd love to hear about your background, and nice to know that you are a cheesemaker. Stephen, go ahead and give a quick introduction, please.
Great. Thanks so much for having me. Sorry to disappoint. I am not a farm kid. So Michael and Erica have me beat there. but spent several years now in the dairy industry and in agriculture at large. Have a undergraduate degree from Texas A&M in agribusiness and a master's from Texas A&M as well in ag economics. Moved up to DC after that, was a consultant, focused in the agricultural sector, did that for a few years, did some work for US DEC and National Milk. Came on board here at National Milk on the econ team almost 4 years ago now. Do a lot of work here on the domestic policy analysis. Also have a joint role with the U.S. Dairy Export Council to do a lot of work on international trade as well. So kind of all things dairy here for the last few years. And yeah, excited to be here and talk more about dairy.
Well, thank you, Stephen. We're excited to have you here as well. So listen, in our report, in the State of the Dairy Industry report the Farm Journal put out, I'm going to kick it off. 43% of our respondents said that they were very optimistic about the future of our industry, which is exciting, right? So I want each of you to talk to me a little bit about what you see as the biggest opportunity ahead for dairy producers. And with that, I'm going to have Erica go ahead and kick it off.
So you talk, Karen, a little bit about the volatility in our markets. And from a producer's perspective, I think we are moving from a period of a lot of dairy products in surplus. We look at spot prices last year, could be as bad as $10 a hundredweight under class. This year, prices much closer to class. Next year, we are seeing a change with a lot of growth in capacity. And so it's really fundamentals of supply and demand. Dairy producers do a great job of making milk, and we are finally moving into a period where we are going to have most likely more capacity than we really have milk to handle. And so I do think, at least in the short run to that medium term, that we are going to see more buyers looking for milk supplies. I think, again, a big piece of the volatility is the export space, and I hope Stephen can touch a little bit on that as well. Where we see the U.S. exporting anywhere from 14% of our dairy solids, I believe up to 18%, depending on prices and business and how the rest of the world is competing with us. So in this case, we are seeing ongoing volatility as we win business in the export market. The cheese ships, it's not available domestically, or the powder ships south of the border. We get our markets cleaned up. Prices go higher. All of a sudden, wait, the US isn't so competitive anymore. Buyers say, no, thank you. And then we go through these waves. It takes a few months to get through them. This is likely the normal phase where we are right now, given our pricing structures with the federal orders, given the international competitiveness. We are very much spot players. We are not very competitive in making those long-term deals. So we are going to be in and out of this market, back and forth, these ebbs and flows that drive our markets 40, 50 cents per hundredweight, or excuse me, 40, 50 cents per cheese. That moves over into $5 to $6 a hundredweight in terms of volatility for dairy producers. So it's certainly buckle your seatbelts. We are in for the waves and the rides. That isn't stopping. From a dairy producer's perspective, hopefully we'll be seeing the floor lift when we see all this additional capacity.
Well, that certainly would be good news and welcoming news to dairy producers. Stephen, what can you add to that? And from your lens, what do you see as, the biggest opportunities out there for dairy producers as we look not just this year into 2025, but next 3 to 5 years, if you will?
Yeah, great. Well, yeah, I'm certainly in the near term, margins have been getting better. Last year we hit some catastrophically low margins in the summertime last year. They've gotten better this year. It's not to say we don't have on-farm pressures still on the input side that's pressuring the farm economics there, but we're moving in the right direction, I think, and we'll see that continue to get better, I think, throughout the year. I think also inflation, just in terms of general demand, is getting better. Consumers are still pretty in a tough spot in terms of their spending capability. I think as we continue to see that inflation ease, I think that'll loosen up some dollars there for consumers to spend some more money. But in the long term, Erica made a comment on exports. I'm maybe a little biased here, working for the U.S. Dairy Export Council, but I'm pretty bullish on our export opportunities here over the next 5-10 years. when we look at the global landscape, global demand for dairy products continues to increase year after year. We've hit a little bit of a speed bump here for the last couple of years with some issues with China, but in general, trend line is growth for global demand for dairy products. And as we move forward the next 5-10 years, our competitors, the European Union and New Zealand, I think are going to be hard pressed to see some significant milk growth over the next 5-10 years. That opens up a tremendous opportunity for U.S. dairy producers to really fill that gap and fill that demand globally. So I think that's a really big bright spot for us in the future is our ability to fill that demand in export market.
Fantastic. Michael, what do you have to add to that to talk about just opportunities that you're seeing for the fellow U.S. dairy producers?
I am very bullish on dairy. I think we have tremendous opportunity. We are a growth segment, We sometimes don't focus on that in dairy, but we've had the last 2 years have been record consumption of dairy products. Cheese is driving the bus clearly. Yogurt, ice cream are doing well. Fluid milk is declining, but we're also finding value in the value-added ESL, value-added milk products as well. So I'm extremely bullish. So is this industry bullish. $8 billion publicly announced of infrastructure growth in dairy processing. We have tremendous opportunities. I think exports will be extremely important to us. I think that's also a challenge for us as far as a trade agenda. But I think the thing we got to keep in mind, 40% of the increased milk production in the last 20 years has gone to the export markets, primarily in the form of powders and cheese. So exports have got to be key for us. Exports also around 18%. We're exporting more of our dairy than we are drinking today. So I always like to highlight this when I'm talking to our dairy industry colleagues and friends. Trade's extremely important to us, and we've got to make sure that we're focused on that, as both Erica and Stephen have said. So I'm extremely bullish. I think there's lots of opportunities for dairy. And I also think another huge area for us is in the whole nutrition, health, and wellness space. The general public wants to live longer. They want to live healthier lives. I think that opens up tremendous opportunities for us in dairy. Protein will be key. We have protein. I think the other part of that will be innovation, moving from taking milk and making the same products we have typically made to fractionating the milk. And I am a firm believer that there's more value in the fractions than we have capitalized on. I also believe there are more beneficial fractions in a gallon of milk than we even know today. But we will identify those. We'll find a way to monetize those, and we'll find a way to contribute to a healthy lifestyle. So I am very bullish on the future for dairy. I think doing those kinds of things will afford us the opportunity to attract some of the very best and brightest when it comes to talent. I think another bright spot for us will be on the sustainability front. I don't think there's any place in the world that is more efficient dairy farmers, dairy producers than what we have here in America. We're producing twice as much milk with half as many cows as we did 60 years ago. That's a tremendous testament to the advances that our dairy farmers are making on being efficient. And when we think about sustainability in the purest of sense, it is efficiency. More units of output with fewer units of input. That's good for the planet. That's good for business. That's good for all of us. And I think dairy has a great story and a great opportunity and sustainability. And I think will give us a competitive advantage. We just see in the news this morning that Denmark has just passed a law putting a carbon tax on farmers at about $28 per cow per year. That will give us a competitive advantage in some respects as well. So a little more than maybe we can go into in greater depth later, but I am bullish on the future for the dairy industry.
Fantastic. Well, let's talk a little bit more as we dive into our report, which illustrated that nearly 70% of the respondents experienced profit in the past 5 years, and more than half plan to grow in the next 5 years. So this is excitement for the dairy industry. And so we talk about the processing, the upcoming, oncoming processing that's in the pipeline, if you will. Erica, I'll let you kind of lead this discussion, if you will. Does this excite you, and do you feel like the U.S. producers are going to be able to help fill the need for all this upcoming processing?
So one of the things we at Everag do, and we appreciate you guys at Farm Journal including our map in your report. If you look at one of the later pages, you'll see a map of the US with dots across it of the expansions that we are tracking that are publicly announced. It's amazing. Like, from the perspective of dairy producers who for many years have been constrained in terms of their ability to growth, whether it was base access plans holding them back, just not being able to find a viable market for additional milk. This wave of expansion and investment is tremendous in terms of providing that market access for dairy producers across the country. You look at places like New York, where there's 5 expansions, new plants, very exciting place to be. And I think that will lift the region as you think of high tide raising all ships. That will have spillover impact to benefit folks in Vermont and benefit folks in Pennsylvania. Additionally, through the center part of the country, there are some huge expansions as we think about the Leprino plant in Lubbock, Texas. Millions of pounds of milk a day has to come from somewhere. Hillmar in Dodge City, Kansas, we've heard is going to be roughly 8 million pounds of milk a day. That's a lot of cows that aren't there today. As we look at especially that southwestern region, it's going to be a deficit region. In the past, they had balanced additional milk from other regions. Now they're going to be needing milk to come from other places. So, I think it's very exciting to see that growth. I'm not certain all of it is going to get filled with what I'll call new milk as far as additional cows. Certainly what we hear from a lot of producers is how tight the heifer replacement pipeline is and how expensive heifers are. I was talking to one of my colleagues yesterday who's a dairy farmer and works at Everag, and was talking about a heifer, spring and heifer, $3,600. And the math that he penciled out is his break even was closer to $4,000. That she was actually worth that much. So I think some of it will come from additional milk, additional animals. Unfortunately, there will also likely be some rationalization of plants. We will see some plants close. I think that wave has already started when we see AMPI closing their Hoven, South Dakota plant, Kansas Dairy Ingredients closing. That unfortunately, there may be a few more that end up on either the chopping block or end up moving locations, looking for a better milk supply, because that region in the Southwest is just going to be tight on milk. And so I think, again, from a dairy producer's perspective, there is hope for increased premiums as we look ahead for the next year or two.
Well, thank you. Michael, I know you probably have some thoughts on this. I was at the Dairy Forum in January, and you're very excited about all this upcoming processing. But tell me more, or tell our viewers more about any concerns or additional excitement with the upcoming processing as far as producers filling that need.
I'm maybe at a little different place than many people on concern about heifers and those kinds of things. I know dairy farmers. Dairy farmers, if the market's there, if there's opportunity, dairy farmers want to grow. Large dairy farmers want to grow, especially want to grow. If there's a market demand for the milk, they'll find a way to start producing more heifers with sex semen. They'll find a way to make the turns. They'll work with rations. They'll increase the milk production per cow. I'm a believer that dairy farmers respond to the market signals, and I'm a firm believer that the milk will be there. And I do believe that all of this construction will only enhance the demand for milk. So I'm where Erica is. The demand for milk is going to be there. We're seeing some shifts in where these plants are located. They're moving more to the middle of the country. And as I talk to my members who are putting these investments down, I'm asking them about, where are you going to get the milk from? Where are the dairy herds? Many of them tell me one of the more difficult decisions they will have to make is which dairy farmers that want to move and put in milking herds there, which ones are going to have to decline, because the investment is there to come build the herds, produce the milk. People see opportunity in this. So I am bullish. I'm pleased to see the investment. I think as Erica said, that will bring changes. New facilities will be more efficient, just as dairy farmers will be more efficient in producing a pound of milk with less input. These processing plants will get more cheese out of a pound of milk, for example, than they have traditionally. So that'll cause some change in the industry, but I think it will present opportunities for dairy farmers for sure, because I think it will increase the demand for milk, and I think it'll put more pressure on our needs for export and our need for trade agreements. So I'm bullish. I believe they will be there. We've seen dairy farmers do lots of things to kind of diversify their revenue streams. I hear prices of Springer heifers the same as Erica, 3,500, 3,700. I'm hearing prices for 3-day Holstein bull calves at 750, 775. I've had farmers tell me, to Stephen's point about the last couple of years, the price for bull calves has been one of the bright spots in the dairy on the dairy farm. So I'm just a believer dairy farmers will find a way to produce the milk that the market is calling for.
Very good. And you're right. There's always where there's opportunities, generally where there's growth. Stephen, what's your thoughts? Do you have more to add to this discussion about upcoming processing?
Yeah. I mean, to both Eric and Michael's point, we have a lot of additional capacity coming online in the next few years. A lot of that coming online this year, a lot of it next year, even some into 2026. And to Michael's last comment there on the export market importance to this, that's a very key piece here. When we look at the additional capacity coming online, or at least forecasted, and then we look at forecasted additional domestic consumption and additional export growth that we can just capture organically, there is a deficit between what we're creating, what we have capacity for, and what we have the ability to absorb here domestically. So we are going to need to look towards the export market to move some of this additional capacity. And that's to Erica's point as well. That's more of a theoretical piece, and we might see some more plants, ratchet down some of their run times, and maybe not running at full capacity, maybe some plants close. So, these are some theoretical high point numbers that we're looking at that will have this deficit, but the export market is going to be key for us moving some of this product overseas. That creates both the challenge and opportunity as well for us to gain market share abroad, gain more footholds in places where we're seeing increased competition from the EU and New Zealand. So this is it's an exciting time. All this capacity coming online, it creates a little bit of a challenge when it all comes online at the same time. But it's a unique opportunity, I think, that will serve the industry well in the future as we work through some of these tougher times here in the near term.
Well, thank you. And I think that dairy producers are generally optimistic. They probably wouldn't be in this industry if they weren't. But there are, I don't want to sugarcoat, there are challenges out there. And in fact, our survey respondents chimed in and said that milk volatile price and labor were their biggest concerns. So let me flip the question and ask each of you. And Stephen, I'm going to go ahead and start with you this time. What do you see as the biggest challenge for dairy producers in the next 3 to 5 years?
Yeah. Some of the pieces have already been touched on right now. The cost of heifer availability and heifer replacement is a challenge. Cost of capital for expansion is a challenge. When you have interest rates that are incredibly high, it's a challenge to make that investment to grow and expand, even if there's appetite for it. Just the cost of doing it is so high right now. I think that just creates a challenge here in the domestic industry to continue to grow. At the same time, we talked about, I made a comment earlier about the margins getting better. They have been, but when we look at the DMC margin, that's just milk price over feed cost, right? That doesn't take into account all the other aspects that go into running a dairy. So other input costs are still incredibly high. We've seen a tremendous amount of inflation in the input sector that's creating a challenge for profitability for dairy farms. That is going to be, I think, the toughest challenge in the near term is just those on-farm economics. We have a new farm bill coming online, probably not this year, probably next year. That's going to create some changes in the industry that we'll have to deal with. H5N1 in the dairy herd is, it's there. And so we're dealing with that. That creates some challenges. But overall, I think the tough on-farm economics is probably the closest, the biggest obstacle or hurdle that we're having to deal with right now.
Absolutely. Erica, do you have anything to add to that as far as just those big challenges that the producers are facing day in and day out today, but also over the next 3 to 5 years?
Well, I would say Stephen did an excellent job as far as challenges for the individual producer. And to kind of link up to where Michael and Stephen are, both very bullish. I'll bring the sober, dismal economist view to demand, where I'm maybe not as bullish as they are. And as I think about demand, I like to think of it in 3 buckets: the export piece, our retail piece. So if you think about grocery, and then finally food service. And if you look at some of the data that we've been seeing, if you look at the restaurant chains, they actually had a really poor fourth quarter. First quarter wasn't that great. So from the health of first off, the American consumer, people are stretched. So we are dealing with very high inflation that people haven't seen in probably 2 or 3 decades, since the late 70s. And consumers aren't used to this. They don't like it. They're really stretched, especially if you look at the lower or even middle class. So how are people choosing to spend their money? And some of the big winners, as you look at the surveys, a big winner was the Chili's restaurant. And they've had a great promotional deal. They call it 3 for Me. Well, that's drawing a lot of people in because it's a great deal. You get a burger that may cost less than McDonald's. So again, people are looking for value. The next 2 winners on that survey were Aldi's and Dollar General, which again, to me, speaks to a consumer that is stretched and looking for value. And then you look globally, where you have China is buying less and less from the United States and others in terms of their overall imports. They were a huge engine of the growth we saw in 2021, even into 2022, although they've been declining in terms of their volume since. And without that engine really driving both dairy imports as well as the economy in that Asian region, I think we do have challenges trying to continue to export at the levels we have. And again, the US then has to go in and compete on price. That's not necessarily a great message, but that is where we tend to win, is when we can be, cheese a quarter below the rest of the world, and powder probably a dime. And that's where the US gets competitive, where we get people's attention on a more spot basis. So I think one of the bright spots for us is taste, flavor. We've got a great product. Part of it is just, can the consumer afford it? And is that the choice they make?
Yeah, well, that's a great perspective. I mean, we always need to know like kind of where the consumer is at, because at the end of the day, that does impact dairy producers. Michael, what is your thought? Is maybe you want to piggyback off of what Stephen or Erica has said, or just overall challenges that you see dairy producers that are being faced with today and into the future?
I see 3 overall challenges. If I want to go to Erica's last point about demand, and Stephen's point, I agree with Stephen. Interest rates, strength of the dollar have not helped us. They don't help us on the export markets. I think those things will rectify themselves over time. From a domestic demand perspective, I think we've had some very significant wins this year. We had 6% of the nation's school milk is about 6% of the nation's milk supply. That was in jeopardy as far as USDA rule to eliminate flavored milk in schools. We were successful in preventing that from happening with a healthy school milk commitment. 37 processors came in and committed to be 10 grams of sugar or less. So there was 6% of our milk in jeopardy there.
My kids, thank you, Michael.
Thank you, Erica. Thank the 37 processors who proactively made the commitment to do that. A significant. I think sometimes we forget about school milk, but 6% of our milk supply there. This administration reduced WIC moms 3 gallons per month of milk. Unbelievable. So we have some struggles ahead with our policymakers on the nutritional value of dairy products. But on the other side of that coin, we had the House of Representatives pass whole milk for healthy kids, 330 to 99. So policymakers are beginning to realize that whole milk is beneficial and that dairy does have a very positive impact on health and wellness. So from a domestic demand perspective, those are some of the things out there. As I think about the three biggest challenges that we face overall across all of our processors, and I would say the industry writ large, workforce is huge. Workforce is probably number one for everyone. It's the case on our dairy farms. It's the case in our processing plants. Even when we come up on things like the 4th of July, you have to change production estimates because it's difficult to get workers to show up for work during the holidays. 3 shifts a day, 7 days a week. That is a growing challenge. We have workforce issues. We need the best, the brightest. We need workers. And again, that's across our dairy industry. I would say another huge challenge for us is trade. As I said before, 40% of the increased milk production in the last 20 years has gone to trade. We think about all the investments in processing, $8 billion slated. I love Everag's map. I use it all the time. It's fantastic. And we continue to add places to that map as well. We have to have a trade policy. I would say to anyone listening to this webinar today, the next time you talk to one of your elected members of Congress, you need to highlight for them, we need a trade agenda in food and agriculture that gets us market access to foreign markets. We absolutely do not have a trade agenda with the Biden administration. And I am very concerned about tariffs if we get a change in administration. Because once we place tariffs on imports from other countries, they retaliate with tariffs on U.S. exports to their country. So if we use it to gain leverage and to get a market access agreement with some of these countries, that might be a good strategy. But in food and ag, we need a trade agenda. I also highlight for participants on this webinar, in the last 2 years, for the first time ever, we have imported more food and ag than we have exported. Food and ag's always had a positive balance of trade, but that's not been the case in the last 2 years. So we must improve our lot with trade, and Erica made some excellent points about China, et cetera. So that to me is one. The other one is sustainability. I think in dairy, we have a great story to tell, but if we see carbon tax, I mentioned Denmark earlier, I may have misspoke. It's about $100 per cow per year of the carbon tax they just implemented. Our system of sustainability in the US is voluntary, and Europe it's mandatory. So we're going to have to think about that as we begin to export our dairy products. Are they going to be able to enter markets where they are putting severe penalties on their domestic producers? And will we see some interference of trade vis-a-vis sustainability? I think we have a very positive story to tell. Our carbon footprint on a glass of milk, a gallon of milk, is the best of any place in the world. We have a great story to tell, but sustainability, regardless of what happens in the November elections, it will be driven by the marketplace, not by regulation in the US. I do think if there's a change of administration, the funding will dry up. The $3 billion has been spent on climate smart agriculture. A lot of that money will go away as the federal deficit grows and as belt tightening occurs in Congress. But those to me are the three, Karen. I would put workforce as number one, trade is number two, sustainability is number three. The other thing sustainability will do, it takes scale for sustainability to justify the expenses, the investments in digesters, and et cetera. It will drive consolidation, probably unlike anything we've seen in a generation of the dairy industry. And that's just change, and change is always with us, regardless. If any of us has been in agriculture as many years as I've had, my goodness, the change we have seen over those years, and I don't expect that to change in the next several years.
Wow, I can't take notes fast enough, Michael. And I appreciate your perspective. Let's keep on the sustainability topic because I think it's a great one. 86% of our respondents felt that the dairy industry will see great pressure to lower their environmental impact. So how, maybe piggyback, and maybe my Stephen, you want to start here, is how is the push for sustainability and environmentally friendly practices affecting the dairy industry today, or will affect the dairy industry in the year to come?
Yeah, Michael made a lot of great comments about the opportunity we have here, but also some challenges in the sustainability space. I think we're putting a lot of investment into that area through Innovation Center with DMI is doing a lot of research in this space. We have this industry-wide goal of being net zero by 2050. We're doing a lot of things to try and push ourselves towards that end. And to Michael's point, in the US, it's happening by the industry. In a lot of other areas around the world, especially in the EU, it's happening kind of a top-down regulatory approach. And that provides little opportunity for innovation in the space when it's mandated by the government. A lot of times, you see the Netherlands come out and say, all right, great, you want us to cut our footprint? We'll just cut cows. We'll decrease our herd by 30%. And that's how we'll meet these goals. And that is an unsustainable way to meet these sustainability practices, right? We need food, we need healthy, nutritious dairy products. And so by cutting it is not the way that we meet those goals. So we need a market-driven approach that meets those goals, but does it in a way that's economical for both dairy producers, dairy processors, and industry to maintain production to meet that goal, meet that growing demand abroad. And to Michael's point, we've made a lot of leaps and bounds in sustainability here in the U.S. We look at, these facts get tossed around, I think, by the Innovation Center, but from 2007 to 2017, it's that 10-year period, dairy industry has required 30% less water, 21% less land, and we have a 19% smaller carbon footprint than we did over this 10-year period. So we're moving in the right direction. We just need to allow the industry to continue to make those moves forward because the consumer is going to continue to demand it. And at some point, somebody's going to have to pay for it. At this point now, a lot of consumers say, yes, we want sustainability. Yes, we want a more healthy environment for the dairy industry, but they say they're willing to pay for it, but the data says otherwise. So until those two line up, I think we're still in an area where we're pushing into some uncharted territory, but we're making moves in the right direction, and it's only going to be more important as we move forward.
Yeah, I think some great points, Stephen. Certainly this conversation is not going away. Erica, are you seeing some of this trend? Do you think consumers are going to be willing to pay for it, but they already kind of have a tight budget as it is?
Well, it is interesting in the sustainability space because there is such a wide spectrum. I don't believe anybody has an agreed upon definition of what is sustainability. And if you go to different parts of the US, sustainability means something different in, let's say, North Dakota than it does in Texas. It's very different, a sustainable dairy in California versus a sustainable dairy in New York. Now, in full disclosure, Everag does have a team of people working on sustainability. We recognize these differences. I appreciate the numbers that Stephen put out. And when we talk to people in the supply chain on the buy side of things, they don't necessarily know what they want. They want sustainability. You tell me what you're doing, and you give me a way to measure that I can hold you accountable to, because my boss is telling me I need to do this. So we're trying to help fill that gap to give a solution that is measurable and accountable so that it becomes not we're going to be nice and rosy and warm and fuzzy, but what did we actually measure? How can we document this? How can we make sure we didn't double count? And if somebody claims the sustainability aspect of it, the carbon credit, nobody else is claiming that same activity as well. So your buyer is reassured that they are getting what they're paying for. Now, I think a concern in the sustainability piece, as I look to Europe, there's 112 cities in the European Union and that region that have committed to net zero. Well, if you read the fine print, one of the ways they're going to achieve that is people aren't going to eat beef anymore, and they're going to be driven to fish. Now, it doesn't say anything specific about dairy, but if you've jumped over your dairy proteins and you're going straight to fish and maybe into plant and or insect proteins, I think there's a real risk to the dairy industry, which I so appreciate Michael and Stephen and their organizations working to make sure that dairy is still a very viable nutritional source for the people here in the United States and around the world.
Great perspective. Michael, do you have any final thoughts? I mean, there's a lot of companies piloting sustainability initiatives, carbon initiatives. What's your thoughts?
Well, first off, I compliment National Milk and the work they've done on the farm. Yes, I think that's been great. It's been an educational effort, and we saw in your farm survey, dairy farmers are not very aware of Scope 3 or ESG, 1 and 3, 1 and 5. Scope 3 is going to be a huge piece of this as consumer-facing companies, products. They roll up Scope 1, Scope 2, Scope 3 to present the real measured, verified facts to consumers. I think the interesting piece of this is going to be in Europe, where it's mandatory, and also mandatory in California, by the way, that's coming. So that's we're going to see different states do different things. In Europe, where it's mandatory, everybody's going to be playing by the same set of rules. So product differentiation at the point of sale with the consumer will probably look similar because everybody's going to be at the same place or striving toward the same place or operating under the same set of requirements, so to speak. And when they start taxing dairy farmers, to Erica's point, they're going to have to measure and verify in order to be able to do that. So there's going to be some veracity to the claims and the taxes. In the voluntary system, we could have some people appealing to a set of consumers, a demographic, a market segment that's not willing to pay for sustainability. And they could care less about the carbon footprint. They could care less about how it's produced. They want the safe product at the least cost. So I think in a voluntary system, we yet to see how the market is going to segment and how the market is going to differentiate, and how are they going to differentiate on price, and how will a consumer, when they're comparing purchasing two different products, how will they know which one is the best from a sustainability standpoint? Is it units of carbon per gram of protein? How will you know as a discerning consumer, and assuming you want to pick the best and you want to do your best for sustainability, how will you know which product is doing the best? So I just think all those things are yet to be worked out, but it's starting with an awareness and education, of which, again, I compliment Farm ES. I think it's done a great job of starting a dairy farm. We've been working with PricewaterhouseCoopers. We're working with many of our members are requiring carbon accounting, carbon metrics. How do you account for it? How do you avoid double counting? They're committing to science-based target initiatives. So a lot of that work is coming. And I think in the next 2 to 5 years, we're going to see a lot of these things play out in the marketplace.
Well, very good. Thank you, Michael. Well, let's kind of take maybe a different topic here. And our report highlighted the dairies, and then you guys are all aware, are taking advantage of alternative profit source, whether it's agritourism, beef on dairy. You guys talked about that a little bit. And even some producers are processing their own milk. We're also seeing technology adoption increasing like we've never seen it before. So, Michael, I'm gonna keep with you for a moment. What trends do you anticipate seeing in the dairy sector in the years to come? Will these trends of beef on dairy, agritourism, technology, do you think that's just the start of it, or is there something else out there that we're not even thinking and doing?
I think we'll continue to see dairy farmers find ways to diversify the revenue streams. That's been going on for a long time. And yes, we have bull calves selling for $750, $70, $75 today at 3 days old. Michael Dice can recall the time when you couldn't give away 3-day-old bull calves. I also can recall talking to dairy farmers who took bull calves to the stockyard and got sent an invoice to pay the commission because the calves didn't sell for enough to pay the commission to sell them. So will we always be at $7.75? I doubt it. Most things in production agriculture and food and agriculture, they don't stay the same. They come, they go, there are ebbs or flows. I think that's more or less normal. What do I see out there on the horizon? I think technology. I am a huge believer in technology. I believe we will have the cost of sensors will continue to decrease. As sensors and data collection devices increase, we'll have more and more data. With more and more data and more computing capability, we'll have more and more informed information and more ability to make management decisions. I believe technology will bring about new innovation in terms of products. I believe we'll see more automation. We are definitely seeing more automation in processing facilities. We are seeing greater efficiency because of technology. And with that will also come the downside of cybersecurity. And we are seeing that in spades every single day. And we have at IDFA, we have a sharing group of technology sharing group that looks at technology sharing and cybersecurity and the risks that they can take. The growth of AI will be here. That to me is unavoidable. It's not if, it's how it's done. I think we'll continue to see consolidation in the dairy industry. We are seeing significant changes today already. 65% of the cows on farms of 1,000 cows or more, and 2,000 farms have 65% of the cows. So I think scale will continue to drive. I think we'll see vertical integration. I think we'll see more dairy farmers go into processing, joining together. We are already seeing that. We'll see more of that. That's one way to grow the number of cows you can milk. Many farmers are telling me now they'd like to milk more cows. They need somebody to take the milk. So those things will play out. For small farms, I think there'll be opportunities there for, especially if you're near an urban area, to invite families over for delicious dairy products, maybe to see cows, to see the farm, for the experience. We may be selling instead of product, instead of value, we may be selling an experience. And I think that will certainly be a viable option. Because fewer and fewer people have any roots to the farm, but they still have a very positive view of farm life and want to go see it, take the kids there, experience it, etc. I think we'll see continue to see the movement of cows to the middle of the country, away from the urban areas on both coasts, and to the open spaces that are welcoming to animal agriculture. I think, as I said earlier, I think we'll see more fractions in milk, more fractionation in milk. We'll see more extracting of value from the fractions and a greater participation in health and wellness. We'll see changes in distribution models. We're already seeing dairy combined with coffee as another avenue to take another stream of milk to different places. And I think there's a lot of times we who have grown up on the farm overlook the value of distribution on the processing end. You just have to have distribution to get your products to the places it needs to go. Workforce will be another one. We're going to have to do more and more to attract and retain the best and the brightest. And the workers in dairy processing and on dairy farms of the future will not have been kids that grew up on a dairy farm. And that's fine. And with that, we'll bring new ways of thinking. They won't be constrained by doing it the way they've always done it, because they won't know how we've always done it. And lo and behold, they'll have new ideas, and many of those will be better ways of doing things. So those are a few of the things that I see out there on the near-term horizon.
That's fantastic. And yeah, I mean, I tell my kids that they're probably an exception as far as farm kids. But Stephen, let me bring you into this conversation and just talking about alternative profit sources. We see a lot of different options. We see a lot of producers kind of capitalizing on that, as well as technology. Do you think that will continue in the next 5 years? Talk to me about that.
Yeah, absolutely. At times dairy can have some pretty tight margins, tight profitability lines. So I think the opportunity and options for dairy farmers to diversify their revenue is always going to be part of growing and healthy dairy operations. Michael laid out a lot of key trends there that I don't disagree with most of those. So yep, I think we'll continue to see dairy farmers. I think we'll continue to see consolidation in the industry. If we look at the the USDA numbers that get put out, the farm census every 5 years, just continue to see incredible consolidation in the number of dairy farms across the country. I think we'll continue to see that occur. I think we'll continue to see those larger operations diversify as well. So I think that's not a trend that I see reversing anytime soon. To a point that I don't think Michael harped on too much in his trends piece is the importance of exports. I don't think he'll disagree that that's going to be a growing piece for the dairy industry to come as well, especially with New Zealand and the European Union struggling to find increases in milk production. We've talked about on this call already the challenges in the regulatory space in the EU. That's going to challenge the growth appetite within the European Union. Even if there's opportunity for dairy, if there's so much uncertainty in the regulatory space, that provides so little appetite for a farmer to take on debt to build a new barn, bring on more cows, or even the processing industry to invest in a new plant or just add capacity onto an existing plant. That regulatory uncertainty creates a huge hurdle to growth in the European Union. In New Zealand, similar situation, just incredible regulatory hurdles to adding cows to the herd, not only from the government in terms of water, cleanliness, but also just competition for land use, right, from other sectors, urban sprawl. So we look at even Fonterra, some of their comments, they're anticipating, Fonterra, the largest co-op in New Zealand, they're anticipating their own milk shed to decline over the next 5 years. So when we see incredible hurdles to some of the major exporters around the world, that creates an incredible opportunity for the US to gain market share, gain opportunities in the export space. So I think that will continue to be a growing, important piece for the industry at large, is the importance and opportunity in the export space.
Absolutely.
Yeah. So I'll leave it there. Erica,
okay. I think we can all agree that there's a huge need as well as opportunity for exports to grow. Erica, back on the
Karen,
Michael's got a comment.
Yep, go ahead.
If I could just comment on,
of course.
I want to comment on, pick up on something Stephen said, because I agree with him, and I just want to echo it. And that's uncertainty. If there's one thing the business community does not like, farmers, processors, no one, is uncertainty. It halts investment. It retards growth. Business wants some level of certainty. I also want to agree with Stephen on his comment about what the regulatory environment is doing outside the U.S. Many of our international members of IDFA are investing more and more in the U.S. because they see opportunities for growth in the U.S. that they don't see back home. They see more certainty in the U.S. than they do back home. So I just want to highlight those for the listeners. I think it's a positive thing for us here in the U.S. It's something we see, but we're not the only ones seeing it. Our international members are seeing that as well. And we're seeing increased investments in the U.S.
That's fantastic. Erica, do you want to piggyback off of anything that Michael or Stephen have spoke about?
Well, I think they did an excellent job touching on great ways for dairy producers to look at alternative income sources. I'm going to just highlight one tried and true method, and that's more components in the milk. And we're seeing this ongoing trend year after year of more butter fat, more protein. So even though when we look at, milk production last month was down 0.9% in the US, you have to pause and go, wait, there's actually as much fat and protein as there was last year. So even here within our shop, we are shifting our thinking, not so much what's the volume of milk that's produced, but what was the volume of components? Because that's how we're making so many of our more storable products, our cheeses and our powders, is from the butter and from the butter fat and from the protein. Now, interesting note, just I think would be interesting for your audience as dairy producers, if you look at the genetics and you're going to select a sire, they're generally, the merit scores are based on financial return. Right now, butter fat is off the charts compared to protein. From a cheesemaker's perspective, this actually is causing a problem for many of our cheesemakers, where we're having so much fat in the cheese that the body of the cheese is not holding up. So when you go to cut it, it's not performing quite right. So, the good news for the dairy producer is you've got genetics that are really helping produce more fat and more protein. But the way the merits work, we're actually producing more protein more butterfat than protein. And it's actually causing some trouble for the cheesemakers. So they're either going to have to invest in some equipment to standardize, or they're going to look back to the dairy producers and say, hey, can you tweak some things on your end? And there may be a financial penalty. We're already seeing a few of those get instituted.
Well, that's a great point. I want to thank you all. I think we could, pull up a whole afternoon and continue this conversation. I do want to open it up. If there's any questions from our audience that you want one or all of our panelists to chime in, and please go ahead and put that in the chat or the Q&A. And I'm going to pause here for a second and say that you can go to dairyherd.com to download the full Farm Journal State of the Dairy Industry Report. I also want to say that our Milk Business Conference is at Caesar's Palace in Las Vegas, December 10th and 11th. And for the second year, we will be looking for the best in the business, which, we have so many amazing dairy producers from coast to coast. So we have 3 awards, the Leader in Technology, our Young Producer Award winner, and Employee Excellence, because we know there's so many amazing employees that that funnel into the success of the farms. So those will be honored at the 2024 Milk Business Conference. We'll have a great lineup of speakers, and we'll kind of continue this conversation, if you will, and talk about challenges that face producers in our industry, as well as opportunities that we're looking to explore. And let's see, was there any, I'm not seeing any questions. With only a few minutes left, I'm going to open it up to our panelists. Was there any last parting thoughts that you would like to share with our audience today?
Karen, I'm happy to go first.
Sure, Michael. Yep.
I just want to say thank you for having me. Thank you, Erica and Stephen, for being on. I enjoyed the discussion. I appreciate what it takes to feed this world. And I remind my members of that every time I'm there to visiting a processing plant, of just the size and scale of food and agriculture. And again, the commitment it takes to make all that happen. And I think about what happens on the dairy farm and the advances that dairy farmers are making in terms of producing milk, producing it more efficiently, producing the highest quality milk any place in the world, and the processors that take that and make delicious, wonderful dairy products. It takes all of us working together. It takes all of us pulling together, focused on how do we grow the pie for everyone. And I love these opportunities to have these kinds of discussions. And it just reminds me of the collaborative work we do together and what a difference it makes. So thanks for having me.
Absolutely. Stephen and Erica, any last parting thoughts?
Well, I'll echo Michael's statements and say thank you to you, Karen, to your team, and to the audience for joining us today for this very fun discussion about the dairy industry. And I hope we can leave folks with some optimism and some positivity. We have got a fabulous product. We have got a fabulous story. We need to get out there and tell it and share the nutrition we have with this country, around the world. Just the great things dairy producers do, as Michael says, to feed the world. Yeah,
it's a great privilege. I tell producers like my husband to wear that badge with honor, because
Absolutely.
they're one of the few that are feeding the world. Stephen, any last parting thoughts?
No, I think Michael and Erica finished up nicely there. Just thank you for the opportunity here. It's always great to have these discussions and dialogue and just talk about the great industry they're working. So thank you so much.
Yeah, absolutely. If we didn't get to your question today, we'll respond via email. But I want to thank once again our 3 panelists, Michael, Stephen, and Erica. Like I said, we could have had the whole afternoon. I had a lot more questions, but I appreciate your time. It's June Dairy Month, so I hope that this afternoon that you guys go out and enjoy your favorite dairy product. It's hot here in the Midwest, so you can guarantee we'll have some ice cream before the day is done. But we appreciate everyone watching today's Milk Business webinar. Once again, our Milk Business conference is at Caesar's Palace in Las Vegas, December 10th and 11th. Follow us along at dairyherd.com, and we appreciate your time. Have a great day.